How's it going, you guys? Q here from Hyperstocks. Welcome, Hyperfam. This video we're gonna go through a lot, and I have a ton of things to cover. So I'm gonna go ahead and get started with them. First, let's address the market mania that's happening with Wall Street bets and GameStop. If you don't know what a short squeeze is, a short squeeze is pretty much there's people in Wall Street betting against the stock, so they're betting that it will keep going lower, and the lower it goes, the more money they make, obviously. However, somebody figured out that there's a ton of these people betting against the stock. Therefore, through a Reddit group called Wall Street Bets, they brought this to their attention, and they ended up buying the stock up. And what happened is, after they bought it up, the people who were betting against it were forced to sell their positions because they keep losing money as it keeps going up, and they began panic selling. Therefore, the stock jumped the insane amount that it did. I mean, that was a euphoric jump that it made. GameStop gained hundreds of percentage in 1 week. Keep that in mind. Keep the panic selling part in mind, because we're going to get to it later in this video. So very important piece of information right there. Next, what happened? So after GameStop had jumped, we see Robinhood, Webull, and a bunch of other broker platforms suspend stocks like GameStop, AMC, and NOK. And at one point, Wall Street Bets was taken down off Reddit because they claimed that they were insinuating violence and using foul language. That is just the reason that they were given. What really happened was the big guys on Wall Street were losing too much money, and they needed to shut this internet source down. So suddenly the tables have shifted, and the power went to the people. Nobody wants to see the little guy win more than the big guy when it comes to Wall Street. So Wall Street will always find a way to shut people down. With that being said, people were really mad. People were angry at Robinhood, at Webull, and they were demanding justice. Politicians got involved, AOC got involved, and now they're holding a Senate hearing about the market frenzy because, the market's not moving. The overall market is now very stiff, where everybody's scared, everybody's in panic, and nothing is moving up and down. We're seeing money start to shift to the crypto markets. It's Thursday right now. You're going to be watching this video probably on a Friday, and it's the last day of the week, the last day of this frenzy week. It doesn't mean it's going to end this week. It may continue on through next week. But everybody is expecting these stocks to come back to life on all these platforms with a little bit of more restrictions, as Robinhood would say, to protect the investor. Tomorrow is going to be, or Friday is going to be, a very interesting day for the stock market. This is nothing that anybody has ever seen before. Speculative trading of this regard has happened before. However, this is a new era, the era of the internet power. And the era of the internet power is what's causing dogecoin, for example, to be up 600% on the day, because the same people and the same mindsets that drove GameStop and other stocks up are driving dogecoin up, endorsed by Elon Musk. We won't get into the crypto side too much. And the next thing I want to cover is the possibility of a market bubble that's happening right before our eyes, and the crash could be very ugly. So we're going to talk to you about how to navigate your way through the next following months, and what are the signs of the market bubble. So I'm not coming here telling you this out of what I think. This is just the signs of a market bubble, and I'll give you examples of how they're all occurring in the stock market right now. Alrighty, so we are going to jump right into it. First, let's go ahead and cover what's happening in the overall market. So we're looking at the S&P 500 here. We can see that this was the March crash back down to 218, and since then the S&P 500 has rallied back up significantly, beating all odds. So through all economic barriers that are happening, and I know that many people say that the market is not the economy, but the market does have a lot to do with the economy, which is exactly why we crashed back in March, because we were so scared of an economic failure. So we have recovered significantly since then, and that's due to the help of primarily earnings from large corporations, tech, to be specific, technology stocks, and these innovations and other stocks that we're going to cover have completely gone off the wire, and they have shot up into sky highs, such as Apple, since the March crash. So we can see that Apple, this is post split, we have recovered in less than a year, and we have gone up way higher than what we were trading at back in February. So it's gone up significantly, and here's the kicker. So here are some stocks that have gone up, and we don't really have any actual strong financial backing from these stocks. So let's just take an example for Workhorse that's gone up to $33. We can talk about other EV stocks that have gone up. We can talk about 3D printing stocks that have gone from $6 to $38. So why am I telling you this? And here, let me go ahead and start with reason number one is, here are the 5 stages of a bubble. The first stage is displacement. So there are innovation or development in fiscal policy, such as extended period of low interest rates. So right now we have low interest rates on our hands. We've had 0% interest rates from the Fed for the last year or so. So we have had the low interest rates. So we have already gone through the first stage. The second stage is a boom, where prices are going much higher at the speed in which investors are jumping in fear of missing out, which is exactly what we're seeing right here. We see many charts on the stock market right now making these exact moves. So we are seeing this exact stage happen. So there's a boom, everybody's jumping into the stock market. Third, euphoria, and this is a very key word right here, because euphoria is what's happening with GameStop. Euphoria is what's about to happen with AMC. You're watching this video probably Thursday or a Friday. Euphoria is happening all across the market, in which everybody is jumping in and they think momentum is not going to stop. So that is the next stage. So, and the fourth stage is profit taking. So at a certain point, there is going to be somebody who takes profits. And the bigger guys, as soon as they start to take profits, there's going to be a large decline naturally, because the stock's price will push lower as people get out of their positions. What happens next? So after profit taking, which is going to be slightly a burning sensation for people holding long positions, it's panic selling. So once panic selling gets introduced to the stock market, there is no stopping it, and we can see a perfect example back in the March crash, where we went down in a matter of 23 days. We went down from our high of 340 to our low of 221. So let's talk a little bit about the highest points during the market crash, and let's see what the stock market was doing around those points during that time. So let's go ahead and go out with the time frame a little bit longer. This thing just went down on me, so we're gonna go to trading view, and we're gonna look at the S&P 500 during the market crash and how it acted at the top. So when we're looking at the this is the daily candle right here. So we want to be a little bit more, there we go. So very clear, very grim picture. So you can see that before we crashed, and this was when the world knew about COVID, we had a period in which we did not make much movement. So we had an entire month where we kind of just relaxed for a little bit, but we set up this very nasty negative divergence on the chart. So negative divergence, if you don't know, on the RSI is a bearish sign. So when the stock is making a higher high, but the RSI is making a lower low, that means there's not a lot of strength in the buying to the top side. So there's a clear negative divergence. Now let's point out the negative divergence that we're seeing on today's market. Obviously, we have a high at this point. We have a much higher high at this point that has a very nasty negative divergence. Another interesting event that happened on the stock market just recently is Apple's earnings. Apple reported $100 billion in revenue, or this quarter, which is an astonishing number, never been reported before from them. However, they dropped. And there's a market wisdom out there that says if a stock that does so well and has done so well for a very strong number of years, reports very strong earnings, and it doesn't move, that means that people expect it to have been already priced in. That means the stock already costs too much, and the market just doesn't see any more upside in the short term. It may see upside in the very long term if you are planning on being a long-term investor, but the short term needs to be corrected back down to a healthy level. Apple being the most dominant company on the stock market, could be a company in which could take the market down, or has a lot of say. So when it doesn't go up on strong earnings, then it may fail us. Now, let's talk about what happened most recently this week on the stock market, and that's going to be the drop below the 10 and the 20-day moving average. And then today, as strong as it tried to recover, the stock market was still pushed back down below the 20-day moving average. So it tells us that we couldn't even get back over our 20-day moving average, which is a little bit of a scary outlook for the stock market, because many times in which we've dipped below that 10 and the 20-day moving average, we have seen strong corrections. However, given the circumstances of what's happening right now and the 5 stages of the bubble being completely in front of us, corporate earnings not moving corporate up even though they did well on them, all those things are a perfect formula for what could be a very strong correction. So how do you approach the next few months, or what do you do for the next few months? If you're a long-term investor and you're truly in it for the long haul, you'll keep your long-term investments open, and you'll perhaps pick up some hedge positions. So hedge positions on stocks like SQQQ, which is the inverse of QQQ, which is the tech index. So technology stocks make up 2/3 of the market, or a little bit less than that. SQQ is the inverse of triple Q. QQQ represents technology stocks, and triple Q represents the inverse of it. So you can see it goes down while the other one goes up. So you can always purchase. It's only $13.85. You can always purchase a good amount of those shares and just keep it as an insurance play in case things don't do too well. You can also purchase the inverse of SPY, or the S&P 500, which is FAZ, and it's only $6.97. There are plenty of these inverses. Do your research, of course. And this is not investment advice. This is just me speaking as some random guy on YouTube and telling you what could be happening. Second way to prep is to maintain a lot of cash. So there's nothing wrong with trading the markets every day. You're always going to have an opportunity. However, sometimes being modest with your positions and staying cash away from positions perhaps longer than a few day hold will probably suit you well, make your money and walk out kind of thing. And final thing to address before we end this video is, where will we go? Where will the stock market go next? If we do crash, and the crash is of the magnitude in which I am expecting, here's the path that we can take. And that's going to be a very, let's say, not pessimistic, slightly less than pessimistic paths. So I expect us to go down to 360 and bounce back up. So I'm actually going to do a path here. Let's see, path. So we could go down to 360 and bounce back up, and we're gonna probably fail to break through these highs, come back down to 340 and come back up, and if we are lucky, we will bounce twice at 340 and come back up. If we are lucky. This is a mild correction. This is not a bad correction. Here is the second path that we can take, and this is going to be a very optimistic point of view. We're going to come down and we are going to bounce multiple times. We're going to keep bouncing at 340, and then we are going to dip below 340. And why is 340 an important level? That is because that was the February high before we crashed. So the stock market did a lot to prove itself and come up above the February high. So this was an enormous breakout. So many people, this is a euphoric breakout because many people in disbelief of the economic circumstances did not see this breakout coming. So if we dip back below it, it's going to be very difficult to convince people to buy it back above. Therefore, we can come back up here and we can actually come down much further. Let me just erase these two. We can come down much further if we are not able to break back above 340, and we can have months of a bearish market until one day we get a bullish turnaround. So, does this mean it's the end of your trading career? Absolutely not. The stock market will always give you higher highs and higher lows and higher lows and higher highs, as you see previously. And there are ways to play the other side. So, if you know how to play puts, if you know how to short the market, you can make money that way, or you can make money on the bounces. So, perhaps the moves won't be as euphoric. Perhaps we'll be a little bit more modest in our approach. But at the end of the day, the markets will always give us some room to trade. Thank you guys for checking in. I hope you took a lot from this video, and I hope you consider some of the things that I said. You guys have a great day. And